I'll keep digging into it, but we do have a big beat on the earnings line, 375 per share versus a forecast of 297. Revenue basically in line, 7.16 billion versus forecast of 7.12, but quite a big miss on the paid net ad lines. I just want to make sure I get this right. The forecast was for 6.43 million, and they've come in with paid net ads of 3.98 million. So missing the paid net ads for the quarter by about 2.5 million, though a very big beat on the bottom line. Shares reacting poorly to this, down 10%. I think Julia Boston is online as well with some further details and angles on this as we continue to dig through these numbers. And it's that paid net ads miss, yes, Julia, that's driving the shares lower.
Yes, well, if you look at what's putting pressure on the stock now, it's the fact that those paid net ads are below what the company itself had forecast. So analysts were expecting 6 million paid net ads in the first quarter. I'm sorry, they were expecting 6.4. The company itself had forecast 6 million. The company reporting less than 4 million in the first quarter. Also, the forecast coming in, the company forecasting that it will add only 1 million new paid net additions in the second quarter. That's well below the more than 4 million that analysts had been looking for there. So really, it looks like a shortfall in subscriber additions versus expectations. There'd been a lot of speculation about how much of the user growth that Netflix had seen in the past year. The company added more than 20 million subscribers over the past 4 quarters. Before this quarter, how much of that was pulling forward users they might have added in this quarter and next quarter. So I just want to point a couple other interesting things here. They say average revenue per membership rose 6% year over year, 5% including foreign exchange. So they talk here about the impact of a pull forward and delayed production. But they do point to higher revenue per user, which of course reflects price increases, among other things. So I'm going to continue to dig in here on the guidance in particular, and also look for more commentary on content spending. The one thing I'm going to say about content spending is they say we will spend over 17 billion in cash on content this year. And they are going to have a couple different facets to the content strategy, including breadth of content. And they also talk about locally authentic stories. So I will dig in here and come back with more once I get through this release.
Shepard Smith here. Thanks for watching CNBC on YouTube.